think the property market in the last few weeks has taken a turn. You can see it, can you guys feel it? It's in the media already, consumer sentiment. If you're reading RP data, the index is up slightly. I've been talking to agents in Melbourne. The listings are up, inquiries are up by 10%. You know, auction clearance rates have hit mid-60s, which means, you know, that's a really good thing because a lot of vendors are still very unrealistic about, you know, how much their houses are worth. Who would agree that all the vendors always think their house is worth $100,000 more than it should be, right? So the reality of what's happening, it's a really exciting time because, and it's perfect timing as well because we're recording this, because I can really sense there's a turn in the market in the last couple of weeks. So it's a really exciting time. We're at 6 o'clock on the property clock, about to go into an upward growth in Melbourne, which is very exciting. So we've got a lot of contents to cover. You're going to have headaches at the end of today, I can tell you, I can guarantee it. There's going to be a lot of mathematics, okay? There's going to be a lot of charts, a lot of graphs. There's going to be random regression analysis. There's going to be a lot of crunching numbers, okay? But we've got to get through all that stuff. So tomorrow, when we're looking at projects around Melbourne and we're meeting developers, you know, you can look at a project with the eyes of an investor rather than the eyes of an owner-occupier. And that's one of the most important things about property investing, is to make sure that when you're investing in property, you distinguish between, you know, what it is to look at a property as an investor in terms of cost per square metre, capital growth, rental yield, versus an owner-occupier, which is, I love the carpets, I love the street, you know, the kitchen looks nice, all that kind of stuff. And the thing that's really alarming to me, having now invested over 2 property cycles, is every single year, people say, well, this time it's different, Konrad. So I'm going to show you, I'm going to go back and show you the property market in Melbourne and Australia since 1901. We're going to study all the property cycles and all the history of the market going back when property median prices were about $1,000. Because really, there's nothing new that's happening now. You know, sure, the interest rates have changed, a few loans have disappeared, low docs are gone, you know, new consumer credit code came in, you know, but that's all irrelevant stuff. The main big picture stuff has not changed. You know, since I started investing when I was 18, there's really nothing new in property. And it's become really boring for me now. So, but, you know, I'm still excited about teaching people how to do it because I like seeing people getting results. And, you know, I'm doing renovations. I'll show you some of the stuff that I'm doing now with properties, property developments and renovations and stuff like that I enjoy doing. But really, there's been nothing new happening in property, you know, over the last 10 years. There's a perception that it's new or it's different this time, but those perceptions are built by people who haven't invested through 2 property cycles. The same articles that are coming out right now that were coming out, you know, in 2001, 2002, before the last property boom in Melbourne. So I'm going to go through all that stuff with you, walking around on the development site, with the plans, looking at projects, you know, and really walking around the streets. And I think it's that tangible aspect of property that is the missing ingredient for most people implementing. If you actually go out there and you look at projects and you walk around and you see the properties, walk on site, you have your plans with you, you've got your depreciation schedules, your rental appraisals, it becomes more tangible, and I think it's easier for people to take action. And that's why the Sunday, tomorrow, which is the most exciting part of this event, is for me to take you out of the classroom environment and actually take you into a real life scenario where we're going to look at 5 different projects. The whole thing is designed to teach you how to build and structure a multi-million-dollar property portfolio, which is what I've done myself, and I'll go through the properties that I've secured myself today. I'll show you the exact properties I've purchased, what I'm doing. So it's a formula that really I haven't developed, by the way, because I've just taken bits and pieces from all these different people and put it together. So none of the stuff that I'm teaching you is actually new. Majority of it I've learnt working for NAB, you know, so it's boring finance stuff, you know, that you've got to know. So I want to spend a little bit of time today about investor psychology because the mindset is the most important thing about investing, and I'm going to relate that back into property investing and what that means exactly for property investors. I'm going to talk about finance. Finance is everything, guys. Let me give you an example. How many people would agree that a 4-bedroom house in Melbourne is a good investment, yeah? Or Toorak, yeah? Or Brighton. So what's the issue with buying a 4-bedroom house in Melbourne? Oh, it's 1.6 mil, the rental yield is 3% or 2.75, which means I'm negatively geared $1,000 a week, right? Or what's the other challenge? I can't get the loan, right? I can't get the gap between negative gearing and the loan repayments. I can't get a deposit together. But see, all those questions are not actually property-related questions, are they? They're finance-related questions. So we kind of know in Melbourne where the good properties are, where the good suburbs are. We know that Kew's a good area to invest in, yeah? We know that, you know, Brunswick is a good area to buy, New Yarraville, you know, Williamstown. They're good areas to invest in, right? But what's stopping most people is actually nothing to do with property. Most things that are stopping people from investing are finance related. And that's one of the areas that is extremely neglected in Australia. And I'm going to spend at least 3 or 4 hours today just purely on finance. Because that's the number one thing that people don't understand, how to structure and build your property portfolio correctly. I'm going to give you the blueprint on how to set it up. And then I'm going to give you the exact terminology of the loans that you need to set up. And you're going to get the best broker in Australia, arguably, to set it up for you. And your ability to break down and analyse property unbiasedly, unemotionally, will determine how successful you're going to become as an investor. You have to take all the emotion out of the equation when you're looking at property, which is very difficult to do because we're emotional beings, would you agree? And we justify with logic. So you've got to kind of have a level of detachment. And if you do that, if you learn that skill, you're going to make a lot of money in property. If you let emotion into the equation, then you're not going to be successful. So if you're living in key areas, and I'll talk about suburbs in Melbourne that I believe are really good opportunities, and I'm going to get really specific, not even the suburbs, I'm going to talk about streets in Melbourne that are really good opportunities over the next 5 years if you really want to make a lot of capital growth. And I'll talk about suburbs that you should stay away from completely because I don't believe they'll ever do anything. And I'll talk about why. And, some people will get upset, but hey, I'm talking about investing, I'm not talking about living for lifestyle.